Hey everyone, welcome back. So we're going to continue the theme of SoFi's earnings, and I'm going to now discuss the earnings report. I had a chance to go over, look at it more deeply, and kind of make sense of what SoFi is saying, and also the call. So I'm going to divide this video in two parts, because if I do the call transcript and the earnings, it's going to be like a 30-minute video, and I don't want you guys to spend 30 minutes on a beautiful day. Well, here it's very beautiful. So go out and enjoy. Stock market will be here tomorrow, day after, so no worries there. But I'm going to go over a few things that I think is very good, that I think is so-so, and then I think it's purely brilliant and genius. Now, this morning you probably have noticed that as soon as the earnings came out and the analyst had a chance to review the earnings, all of a sudden we received this huge downgrade of all the analysts coming out, and they're basically downgrading the stock to $7 to $10 from $14 and so on and so forth, which is very common, and it has nothing really to do with, in my opinion again, it has nothing really to do directly with SoFi. It's the market conditions, because things are slowing down, but SoFi yet reported an amazing earning and a very upbeat guidance. And one of the things that I really noticed in the earnings or the report that they gave was very bullish sign for SoFi going forward. So we are going to look at all that. But there are macroeconomic factors happening in the market right now. Look what happened with the CPI data, right? I mean, when things like this comes out where it beats all analyst expectations, I was reading reports after reports on how the CPI data is going to come out at like 8.1, and it's the core CPI is going to reduce. And of course, people are still paying high prices for food. People are still paying high prices for many other things that they were paying much less 6 months ago. So in a situation, in a market conditions like this, when I think S&P can go down another 7 to 10%, that's my opinion, that S&P from where it is right now, it can easily go down. I mean, when I'm recording this video, I'm going to quickly take a look at S&P here. So when I'm recording this video, S&P is at 4,015, 4,016, is flirting with that number. And it has gone to 3,973 this morning on the 11th. I feel S&P can easily come down to 3,700, 3,600 before we can see that whole capitulation that I talked about of buyers coming in and buying. So when S&P, or if S&P will drop down to that level, of course stocks like SoFi, of course stocks like Tesla, of course stocks like Apple, everything is going to go down. So we are going to see that going forward because of the market condition and because of the macroeconomic factors and microeconomic factors that we are dealing with right now. So I'm going to share my screen and I'm going to go over a few things that I see in the report. I have highlighted them so I don't waste too much of your time and we can quickly go over. Okay, so let's take a look over here. You can see the screen. Yes. Okay. So first of all, let's start with the good news. The things that are some of the things which were very obvious, of course. So we delivered another great quarter right here. Okay. We delivered another great quarter with record adjusted net revenue up 49% year over year, a 7th consecutive quarter of positive adjusted EBITDA, and a continued robust growth in members, product, and cross-buy. So the two things that stand out for me here is members and cross-buy. Products, yes, it's a great thing, but if they can continue to ramp up these two areas, I think they are going to do phenomenal in the coming quarters. Let's go ahead and proceed. Outperform across market cycles. That is basically they are saying that doesn't matter if the market or market conditions are bad, market conditions are good. We are prepared to tackle what the market condition will give us. Along with that, strength across all three of our major business segments. So the three segments that they're talking about here is lending segment, technology platform, and financial services. And this is what I've told our Discord members, and this is what I'm going to repeat over here as well, that like Tesla is a multi-level vertically integrated company. That means it's a solar company, that means it's a tech company, and that means it's a car company. Same way, SoFi is also vertically integrated, multiple companies in one. It's a lending company because they have lending product, a lot of them. It's a technology platform because of Galileo and Technisys now. And then it's a financial services company because it's a bank now. So these are all positive points for SoFi and a differentiator of SoFi from other banks and other fintechs. Now let's take a look at some of the numbers. Our record first quarter adjusted net revenue of 322 million and adjusted EBITDA of nearly 5 million. So look at what's going on here. They had a total net revenue of 195 million, and then oops, I just deleted it. Okay, there you go. They had a adjusted I would say total net revenue of 195 million, and now they have in 2022 a net revenue of about 330 million, and this is the first quarter ending on March 31st. Both these times, if you look over here, the expense or the net loss was 177 million in 2021 when the revenue was 195 million. Okay, net loss right now when revenue is almost 330 million, well 330 million, not almost, but the net loss is 110 million. So net loss has come down while the revenue has gone up. In this case, revenue was not even 200 million and net loss was almost same as the revenue. I mean, if you really look at it. And over here, if you see, a net loss is 110 million while the revenue is 330 million. That's why the loss per share is 0.14 as compared to 1.61 just a year ago. I will actually go in the loss as well a bit more. Now let's continue reading this. So we also maintained our strong momentum in member, product, and cross-buy growth. Cross-buy growth is one of the most exciting parts for me personally for SoFi, because I feel if SoFi can maintain their cross-buys the way it is right now, like basically sell to their existing customers, that's the most profitable way for a company to make money. Doesn't matter who it is, doesn't matter if it's Apple, doesn't matter if it's Tesla, doesn't matter if it's SoFi. Cross-buy is huge because with cross-buy, they don't really have to spend money to acquire the customer. They just basically have to sell more product to the existing customer. So this is really good. Now, along with that, it says we added more than 408,000 new members, our third highest member growth quarter, ending with nearly 3.9 million total members, up 70% year over year. Again, a very, very bullish and an exciting sign. We added right here, you can see, we added nearly 689,000 new product, our second highest product growth, ending with nearly 5.9 million total product and 84% annual increase. Again, I'm not too big on in terms of products, but when I see a 70% growth in the number of members, I was estimating about 3.8 million. They came out with 3.9 million members, which is of course a very bullish sign for SoFi. For the member growth. It's a member company, right? I mean, lending right here, the three businesses that they have, lending, technology, and financial. Lending and financial services largely depend on the number of members they have. Along with that, we are also off to a great start standing up the bank. Deposits total 1.2 billion, right here it says, at quarter end and have accelerated since we raised a maximum API of 1.25% in April. Again, a very bullish sign because they just started as a bank recently. We know that SoFi hasn't been a bank for too long of a time. It has been a year or so, that's a different story, but they just became a bank. And for them to be able to attract new members, also the deposit total 1.2 billion, which is only going to go up from here. And also the interest rate that they're offering, 1.25%. I mean, in current stock market conditions, I would take this, put my money here instead of just gambling in stock, because we know what's going on with the stock market. Like one day it's up, one day it's down. I mean, look, S&P can't even make its mind. It's like 4,020 now. It was down to 3973. It's not sure which direction to take. Okay, moving on. Then member and product growth. SoFi achieved its third highest member growth and second highest product growth ever in the first quarter of 2022. Again, given the market situation and conditions, this was really a very refreshing news. New member additions total 408,000, brought about 3.9 million by the quarter end, up nearly 1.6 million or 70% from the end of 2021's first quarter. A massive growth for a young fintech company dealing with all the headwinds that they're dealing with. New product addition to 688,000 in the first quarter were SoFi's second highest quarterly result. Cross-bought product increased 22% year over year. That means cross-buy, I told you, it's very critical for any company that has product that has members, because that means their acquisition cost for each member is less. So 22% over year increase in the given market conditions. This is not 2020. This is 2022 when everybody is suffering. Look around. Name a company that is doing well right now except the energy companies. Any company that you pick, PayPal, which has been around for a long time, JP Morgan, Bank of America, all these are struggling. They have huge headwinds in front of them. In that condition, if SoFi is able to increase their cross-sell 22%, that's a very positive sign, in my opinion, where SoFi stands today. Okay, then it says, as a member continue to demonstrate high product satisfaction and a greater willingness to adopt new offering across the platform. Taking care of their members is the #1 priority for any company, and SoFi is doing pretty well, I think, further reinforcing the value of SoFi's unique FSPL strategy. This is the member growth, and as you can see, Q4 was we had 3,000 or 3.4 million, and then now we have 3.8 million members, and I see the product growth right here from 5.1 million to 5.8 million. So they are going in the right direction if you really look at it. Now, this will only go up because they just became bank. They just started to attract investors, those who are comfortable putting their money in a secured bank as compared to a fintech that nobody has seen a building or a logo of. So now I'm going to take you to the next screen, which is very exciting. In the financial services segment, total product increased by 111% year over year to 4.7 million from 2.2 million. Lending product rose 20% year over year, up from the fourth quarter 18% annual growth. Now, lending product, when the interest rates are higher, some say that lending product they don't do very well because people don't want to take loans because of the higher interest rate, which I agree. But in our case, in US right now, the way things are going, looks like there is a demand for loan products, which of course is going to help SoFi in their overall market reach and also attracting new customers. Technology platform enabled accounts increased 58% year over year to 109.7 million. Again, a very, very bullish sign right here that their Technisys and their Galileo accounts are also doing phenomenally well. I mean, 58% year over year, and that too from business to business sector, which is, again, a very bullish sign. Okay, now let's take a quick look at some numbers. So total net revenue from lending is 252 million as compared to 147 million, 71% increase. Contribution or contributed profit is basically 51% increase if you see over here a percent change. So lending product offered more profit to the balance sheet, which is again an exciting news in the current times. I'm looking everything in the current times. Adjusted net revenue lending to 244 million as compared to 168 million, around 45% increase. Now let's take a look at the technology platform sector, which I read a few things which is very exciting. So technology platform segment net revenue of 61 million for the first quarter increased 32%. Now we have seen time and again the technology companies have a growth rate of about 30 to 35% year over year. AWS still growing at that pace. I think that what Galileo is doing over here is very, I would say it's not out of the world, like they're not growing 50%, but a 30 to 35% growth in these market conditions is also not bad given where SoFi is right now. So record Galileo revenue and a small contribution from Technisys, a leading cloud native digital multi-product core banking platform acquired by SoFi in early March. Contribution profit for just over 18 million increased 16% year over year for a margin of 30% versus 34% for the same prior year period. So prior year period, 34%, now 30%. I feel that as we get into more higher interest, I would say, world where the interest rates are rising, we are going to see these numbers do well for technology side of things. I think SoFi is going to do very well with Galileo and Technisys in the coming days because people are finding ways to implement fintechs in the current system. Doesn't matter if it's a credit union, doesn't matter if it's a small bank. They're trying to adapt to the app based because they know that people are not going to go into the branch and they just have that expense sitting on their head where they can totally get away with it. So I think we are going to see a 20 to 30% gain or growth in the coming years from these platforms, and then we will see some spikes on certain quarters depending on the market condition. This will likely require operating this business at 20-30% contribution margin range for the foreseeable future. Okay, SoFi plans to leverage the combined technology capabilities of Technisys and Galileo to create only end-to-end vertically integrated banking technology stack that can uniquely support multiple products, including checking, saving, deposit, lending, credit card, and future offerings. Now, Anthony Noto always mentions AWS as the word in the calls. We want to be AWS. We want to be AWS. And all those people, those who are familiar with AWS, one of the biggest strength of AWS is being flexible. If SoFi achieves that level where they can have a blanket, let's say a mobile app, where a bank comes in and they put in their logo and they put in their services and they turn it off on, and all of a sudden you have a full-fledged banking app at your fingertips, that is going to be huge. And I'm not just talking about banks, I'm talking about the reward systems. I'm talking about the point systems. A restaurant can have a point system where anytime a customer comes in, they scan their code and they get a point and they get a free sandwich. I'm just giving you an example. These kind of things are very hard to do for a small business because they don't have the resources, they don't have the power to maintain these things. And if SoFi can be that interim, that middle person, I think that we will see a huge growth in Galileo and Technisys. And I'm oversimplifying it. I mean, of course, this is not a reward system kind of thing. It's more of a fintech, financial, but it falls in the same category of adopting and creating something new from scratch within days instead of within months or years. So I think that's why SoFi's Galileo and both Technisys have a huge future in this current market condition when the whole world is shifting into the digital money. Okay, now let's take a look over here. So this over here, look, SoFi Money, the growth I'm showing here for the financial product, look at credit card from 19 million to 117 million, 504% growth in the credit card. And this is only going to go up now they became the bank. And at work, basically financial products from 19 million to 44 million, which is another huge sector, which I think SoFi can do really well if they perform or if they reach out to the right people. Because personally, yes, for business to business is really money making because you spend less money acquiring one customer, but then that one customer gives you so many members. So if they go and start offering their product to a business which has say 100 employees, all of a sudden their reach is now to 100 employees, not to just one business. So I feel at work product growth is really exciting for SoFi. Total financial services product, 111% growth from a year before, which is again a very good number if you look where we are right now with the other companies. Okay, management expects a continuation of strong growth in the second quarter with expected net revenue of 330 million to 340 million, up 39 to 43% year over year, and expected adjusted EBITDA of 5 to 15 million. I think they are being conservative here. I think SoFi is going to come and deliver upward towards 350 million plus revenue for second quarter, because we are seeing the exhaustion in the market. And I feel when people will see the exhaustion in the market, they're basically ready to go and start buying. I mean, I think we are seeing the bottom in the next few weeks where we're going to see the bottom of the stock market, and then things will start to turn around. Now, bottom for some, right? Like, I mean, if you have bought the stock right here, you're not going to go and buy it because you're so scared. But if you are putting the money in, and I'm talking about institutional investors, I'm talking about hedge funds, I'm not talking about retail group, because retail group is still licking their wounds. It's going to be a while before they feel confident again to come in the market. But some of these hedge funds and institutions, they cannot keep cash for a very long time. They are not allowed to because people are not paying them to hold the cash. People can hold their own cash. People are paying them or keeping the money with them so they can make money for these folks. So I think that we are going to see more and more institution and hedge funds now, given the CPI data is out, now the FOMC is out, they're going to come out and they start to invest more into the markets. And that is going to bring up a sentiment change in the market, which is going to be key for retailers to come back into the game. So it's going to be very critical and very interesting next few weeks and months as we get into this summer months to see how the sentiment in the Wall Street changes around stocks and also around investments. So it's going to be interesting of how it is. Okay, so then after this, what I want to share quickly with you guys before we end this video, I know it's already going, how many minutes now? I hate to make too long of videos, 20 minutes, wow, okay. So look, one thing I want to pay attention, or one thing I want to bring your attention to here. So non-interest expense, and somebody actually commented in the comments that, hey, their provision for credit losses was almost 12 million. So if you take this 12 million out, their net loss is actually less than 109 million. It's about 97 million or 95 million. And so that means their loss per share is better than 0.14 negative. I think it's probably like, if it's like a 97, then it's probably like 11 per share loss. But here's the thing, the provision for credit losses is only going to get bigger as they receive more and more money in their accounts, in SoFi's account, because people are going to deposit more money because of the higher interest rate. This is something that all banks have, because they need to have a provision if the person doesn't pay back, on there. So provision for credit losses, don't consider this as an expense that can be taken out and then you can really see the true value of the loss. No, no, no. These losses will occur with the company. And I think we are going to see this balance go up. See, look, before they had nothing because they were not the bank. Now they have more, they're offering the credit card product and it has taken off really. They have to have this provision and they have to continue holding this, and this amount will only go bigger. But their technology and product development is 81 million as compared to 65 million, which I think is really low. I think they need to be more aggressive in their technology and product development. That's why people are complaining that app is kind of slow and the option trading is not here. It should be here. And I absolutely agree. I want to see this double in next quarter, because if they are doing this, that means they're really honing into the technology side of things, which is going to be very exciting. Along with that, look, sales and marketing. Sales and marketing, 87 million to 138 million. Okay, so they are spending, of course, more money in sales and marketing as before. But this sales and marketing, if you see over here, from 77 million right here, or sorry, what I'm looking for, right here. Okay, so from 177 million of loss in 2021, the third quarter, to 110 million of loss that you can say net loss that you have over here. Along with that, they almost not double, but they went up in their sales and marketing effort. This number needs to stay where it is and revenue needs to go up. This number needs to come up in the next quarter. These are the three things I'm looking for. If they are spending double this in the next quarter and yet the revenue is not double, that's not a good sign. I want to see this number go up. Of course, it's going to go up because, again, they're a bank now. There's a different kind of advertising that they need to do. But the revenue should also multiply with the same range as they're spending in sales and marketing. And then general and administrative expense. Look, becoming a bank was a huge expense, or gearing up for it was a huge expense at that time. But look, their general and administrative expense actually reduced, which is, of course, a good thing to see. Some of the companies I have seen where Palantir a couple quarters ago, their general and administrative expense went up like 3 times. I really want to know what happened. So if I see general and administrative expense go down and revenue is going up and their sales and marketing is going up, it's a good sign that the company is on the right track. That means they believe in the product and services. They believe that by advertising more, they can attract more customers and they can actually do well with the product and services that they have to offer. So this provision for credit loss will always be there. Don't think or don't take that off and think that they had a less net loss. That's not the thing. This balance will grow as their balance grows internally. Okay, now when a company is really growing fast, this is very common to see from quarter over quarter how this balance really changes, because they are doing acquisitions, they are giving stock away, they are going cash-based compensation. So all this really matters for the company, and they need to continue doing that in order for them to basically survive and also lead in the category. So I'm not concerned about that number yet. They need to have or give us positive quarter. And at that time, in the positive quarter, we will see huge differences in these numbers as we go. So I personally, I'm very bullish on the earnings, and I really like what I see in terms of the numbers, in terms of the members, in terms of the financial product. And I think that we should continue to see this in the coming quarters, where they will do phenomenally well and they will be conservative in giving out their guidance for the next year. So I think we are on the right track. Again, it's my opinion and I'm only looking at it. I'm not an analyst and a financial advisor. So please do your own research. But let me know in the comments, what do you think about the financial? Is there anything that made you not liked SoFi after this particular earnings, because I think that, the call was also amazing. I have highlighted some questions and I'm going to go over in a separate video. I don't want to make this video so almost like 30 minutes. It's too long of a video. So thank you so much for joining. Thank you so much for all the comments and all the likes that you have given to the video. And if you enjoyed this video, then give this video a like. And for more one-on-one conversation, consider joining our Discord and Patreon. Links are in the description below. As always, a pleasure to share all of this with you. Until next time, you all have a sparkling day.